Thank you, John. I was actually going to bring some show and tell tonight, but they confiscated my chainsaw at the airport security, so that got left behind. Good evening, everybody. First, a bit about TorQuest. We started TorQuest in 2012. I've been asked to speak tonight about how we generate returns in private equity, and I've been doing this for 12 years, so I'm going to summarize this all in 20 minutes. I'm still trying to figure it out, so 20 minutes should be enough time. We founded the business in 2012 as a mid-market private equity fund in Canada, focusing on the Canadian market. Today we have 14 investment professionals, just over $1 billion across 2 funds. Under management, we have 15 platforms that we've done since 2012. When I say platform, that means investment in a specific company, and we've done over 50 add-ons to those companies over the past 12 years. Our current portfolio consists of 7 unrealized platforms, so we own 7 businesses today. We're one of a handful of mid-market buyout funds in Canada. I could probably count them on my fingers. They're all located dispersed across Canada, although there's a heavy concentration in Toronto. And we have a very generalist focus. By that I mean we don't invest specifically in one industry. Canada, as everybody knows, is more of a broad, shallow investment area, and we figure if we focused on one particular industry or one particular sector, our deal flow would be a trickle rather than what I'm about to show you in the next few slides in terms of how many deals we look at per year. The businesses that we tend to focus on, or the businesses that we like the most, are entrepreneur or family successions. We partner with entrepreneurs very often in the transactions we do, or families. We will look at corporate carve-outs or divisions of multinationals, orphan divisions generally. We'll do management buyouts, which means basically partnering with management teams to buy out businesses, and general recapitalizations. I will say that the EBITDA of the business, the earnings before interest and taxes and amortization, should be at least about $5 million before we get involved and look, and that, to be honest with you, is just a little bit on the small side. So here's our history. In 2002, we got started. We raised $183 million of capital. Before that, I was actually an operating guy. I ran a business for 14 years that I was the control shareholder of and CEO of. It was kind of a fancy title. Being CEO just basically meant I did everything. I sold that business just before starting TorQuest with my partner Brent in early 2002. And we came together with the idea that we would use my partner's capital market experience married up with my operating experience, and we would buy businesses that needed some sort of catalyst in them to drive returns, some sort of operational catalyst in them to drive returns, and I'll explain more about what that means in a minute. So we raised $183 million. John mentioned Ontario Teachers' Pension Fund. They were our first investor, our seed investor, really got us started in 2002. We did 5 platforms in that fund, and we ended up with a 2.9 times multiple of capital, a 62% gross IRR, and a 37% net IRR. Difference between the net and gross being the 2% and 20% fee structure that John mentioned in his remarks. We then, on the back of that good result, went out and raised $550 million in 2006. We did, and 2006 was a fantastic time to raise money. Everybody was talking about private equity. It took us literally about 3 weeks to raise the money, which was quite remarkable, at least to us at that period of time. But then, of course, we took that whole fund through 2008 and 2009. Not the most fun I ever had. We did 8 platform investments in that fund. We've realized 3 to date, and we've done over 25 add-on acquisitions in the fund. So that TorQuest Fund 2 is still an unwritten story about how it will end. We're hopeful, based on the results we've seen, that it won't end up like Fund 1 because it did go through 2008 and 2009, but it should be a respectable result. In 2013, we closed our latest fund that we're currently investing, which is $535 million. We've done 2 platform investments to date, which takes us to 25% invested. We're hoping that on Friday we're closing our 3rd investment in that fund, which will increase that to 3 platforms and about 35% invested. So over the long period of time, we've invested $635 million of total equity invested. And our returns, if you look at the gross returns over the past 12 years, have been 54% on realized investments only. So that means only businesses that we've, in fact, sold. Again, it's gross IRR. It's very difficult to apply our fees to come up with a net number until a fund is completely done. So it's a quick snapshot of who our investors are. John mentioned the pension funds, so I won't really go into that, but we have a mix of US, Canadian. We've had some Europeans. We don't have the Europeans in Fund 3. We have financial institutions, which are basically all the major Canadian banks. And we have fund of funds. Northleaf, as John referred to, is a big investor in our fund. And then for the first time in TorqueWest Fund 3, we have family offices and individuals showing up. So that box, it might have been that big in Fund 2, meaning 1 or 2 people. Now we actually have a substantial number of family offices and individuals. And we expect, as we go to raise TorqueWest Fund 4, that number will in fact grow significantly.